Welcome. Energy sector financing and scalability is our topic. Indigenous businesses have difficulty sourcing funding for their business and for scaling up as well. We'll speak to a corporate finance expert who will guide us on how to solve these. Come with me. Manuel Asiedu, CEO of Manuel Africa. Welcome to Energy Quest.
Thank you, Lesley, and I'm grateful to be here.
Okay. Tell us about Manuel Africa.
So, Manuel Africa, we are a corporate finance consulting firm.
Okay.
More of a business advisory firm to corporate entities about financing.
Okay.
And financing, largely, we concentrate in both the public sector and the private sector growth areas. We're looking at growth sectors, such as the oil and gas, the energy sector broadly. We are looking at cocoa, we are looking at infrastructure.
Okay.
And we have unique interest in these areas because, one, they are the growth sectors of the economy. And then, two, they are the areas where we've not seen significant participation of our local businesses.
Yeah, very true.
And that's the key reason we want to focus in those areas, work with corporates, explore opportunities, and see local businesses thrive in these areas.
Okay, so at Energy Quest, we have interest in local content growth and development of indigenous businesses. So help us here. What are some of the opportunities that are available for businesses?
Opportunities available for businesses, specifically in the
energy sector.
So let's take the power sector to start with. We have IPPs dominating the power sector now. And the only local player that is significant is VRE. So, as I mentioned, you have the VRE and you have the IPP. And the IPP, I mean the independent power producers.
Yeah.
Now, the independent power producers, almost each of them have some local partnership, like a representation of a Ghanaian.
Okay.
But not so much of ownership. We know of AXA, we know of Ameri and the like, not so much of ownership.
Yeah.
VRE has some thermal activities as well in Takrady. Again, that VRE is the only local power player, and VRE is a government entity. So the question is, how do we get our local businesses involved in that area? And it's not just a local business. How can we even get you, Lesley, to have a bit of ownership in
the power sector?
Assets? That is how we have to look at local content. We should be able to get Kwame, Kofi, etc., in the village areas to have a stake in the power sector. That is how we should look at local content. If we don't look at local content in that broad spectrum, then I think we are only creating frameworks for private businesses to flourish. And because of lack of capital, it will still be dominated by foreign players.
The true benefits would never come through. But what are the challenges why the private man is not able to get into these areas?
I think that it's the way we started. As a country, the provision of these services traditionally had been on the government.
Okay.
So it ended up being that the government owned the assets and delivered those services. We've encouraged some private participation, but we need to do more when it comes to the local content. We need to specifically target participation by local private sector. I think the energy sector is a capital-intensive environment.
Very much.
And for that matter, raising capital, raising financing is a key challenge in that sector. If you're looking at storage facilities, for example, it's a huge capital outlay.
Very much, yeah.
And you need a kind of partnerships between local entities and foreign entities, foreign financing, etc., to support the development of these storage facilities. If you're looking at just the supply of fuel, for example, and in the power sector, IPPs are dominating now. if you're looking at our installed capacity, the generation mix is about 20-80% today. 80% being controlled by the thermal production. A key thing for thermal production is the supply of fuel.
Yeah.
And you need huge banking lines
before you can do
to
this.
bring in fuel. So the key challenge for local participation is raising financing for both the infrastructure, the capital expenditure they need to do, as well as the short-term trade finance activities.
How can locals get the funding to be able to do such?
Okay. So before I come to the specific solutions, let me give another variant of how the problem is. So this is the core problem, that is the ability to raise financing. Now, you don't go about raising financing when you need it.
Okay.
And that comes with the late submission of proposals. As bankers, and I've left the employment of banking, but I'm still in the activity of investment banking. As bankers, one thing we hate is coming to us when you need it.
Okay.
Because then you are not patient and you don't have the time to go through the rudiment for developing the bankable proposal that we want to see. So my advice, first and foremost, will be businesses ought to think about financing when they are putting their development program, their budget, etc. together. Not think about financing when they need it. That is very fundamental.
Then there's enough room
to go through the process and actually to get the right financing product. It's a lot easier for a business to go to a bank and say, I need an overdraft. I will simply tell you, you tell me what your problem is, and I'll recommend the right product or solution. And that is where we come in. We sit with you, we go through your business model, we identify the opportunities you have, your challenges you have, both in your own business as well as the industry in which you operate. And then we develop the proposition from there.
Okay.
When you develop propositions that way, then you've gone through the thought process of the interrelationships between your balance sheet and your P&L, your industry and your business, and the opportunities you have with your clients. Then that can be presented to banks for financing, both local and international. And when I say P&L, I'm talking of profit and loss. There's a relationship between a profit and loss statement and a balance sheet.
Okay.
Both correlate to each other, and a banker will go through that to identify the risk in your business and structure your financing around the risk framework of your business. That is the core thing. Now, to address the specific challenges in financing, for example, many businesses would think that to approach a bank for financing, the first thing they need to think about is a collateral.
Because that's what is often asked.
That's what is often asked. The reality is that for serious investment bankers, that is the least question they would ask.
Okay.
For example, you can have cash and go to a bank like ABSA or Standard Chartered and say, I want a loan, I'm going to give you cash security. They won't jump at it. And you would ask why? I have cash as security, why won't you jump at this opportunity? Bankers want to see that the core proposition you've given them could stand on its own.
Makes business sense.
Makes business sense before they consider the fallback. And in some situations, you can actually create the fallback from the very proposition that you are presenting and not from any other third-party assurance or third-party assets. And business, and again, it comes to approaching the bank early enough. Other than that, you're not going to get the right solution.
So capital sourcing is not as complicated as we see it?
I don't think capital sourcing is complicated.
Okay.
We haven't fully come out yet in terms of the impact of COVID. But the government recently raised Eurobond. In these difficult markets, it was more than twice oversubscribed.
Oversubscribed, yes.
Capital is not an issue. It is what we call bankable projects. That is an issue. Presenting a proposition to a bank that the bank can rely on and say that I can give you financing for 5 years, for 7, for 10 years, for 15 years even. I can give you part in cedis, part in dollars, or whatever it is. and because I'm assured that you'll be able to pay back. And if there are any risk events we didn't see in the structuring of your financing, we can have some fallback.
Okay.
And that is how bankers will look at your proposition.
Okay. So, regarding scalability, what do these indigenous firms need to also become global or regional conglomerates?
Scalability, it's either ingrown from within the business or you go through acquisition, for example. One thing we don't do so well in Africa or in Ghana is acquisition and measures.
Yeah.
Okay.
That's true.
You go out there, there are conglomerates. Most businesses coming together. And in this day and age, in the financing structures and schemes that we can develop, you possibly don't even need to put businesses together in common shareholding. There are vehicles, special purpose vehicles you can use and actually create common interests for businesses to have something very big.
Okay.
For example, so let's look at the energy sector. Let's look at the petroleum sector. We have the bulk distribution companies, the BDCs. It is a requirement, or it was a requirement of them to have their own storage facilities. Now, the situation we have then is you've got BDC 1, BDC 2, 3.
Everybody working
Everybody
on one.
having a storage facility. Now, either that storage facility is half empty or it is full of fuel. If it is half empty, you are underutilizing the capital investment. If it is full of fuel, you are possibly not maintaining the right inventory and stock. So in either way, you are putting some money to waste.
Yeah.
If you are able to bring these together, you can optimize it. Then you can talk about scalability because you can use the excess capacities and look at the regional markets.
Yeah.
Other than that, we will still be here, and the likes of Trafigura and Co. would always be scaling up significantly in our own environment when we already have the ability to do so.
But why do you think Ghanaians are not ready to come together?
I don't think they're not ready to come together. What I think is, have we encouraged them to move away from a business profitability mindset to a business responsibility agenda?
Okay.
Every entrepreneur, of course, will start off having a business profitability mindset. But then it gets to the point of legacy when you want to develop a responsibility agenda.
Okay.
And in this country, we've got some stewards. We've got the likes of Kweku Bediakon, we've got Emmanuel Mensah in Sage.
We've done it.
We've got the Cyruses, and they've done it. The thing is, can we encourage them to get into the responsibility agenda, where then they will look at scalability? And these guys need free hands to operate. Not free hands for them to sort of milk out from consumers, no. But free hands to do what they think, the big dreams they have, free hands to do that. And I can tell you, they surely can.
Okay.
They surely can, because they've done it, they've demonstrated it.
Yeah, they've proved
They've
themselves.
proven themselves, and they can do it. So that is what I would encourage, that get these business executives into a responsibility mindset to the economy. And then we'll begin to see them scaling up significantly, possibly even beginning to export fuel out of Ghana.
You know, you're right. If we can move from this competitive mindset and say, no, let's collaborate for maximize the benefit, then scaling up becomes easier. Then we can have these big conglomerates also from Africa, because now we don't have them. It's always from the West. So, Manuel, forest risk management is one of the topical issues in the energy sector. It affects both the businesses that are starting up and those that have already scaled up. How best do you think that this can be handled?
Thank you, Lesley. Very important question, especially for that sector. primarily because they are dealing with a world commodity that is controlled by a world market activity, both in terms of the currency, foreign currency, and in terms of the commodity price itself. So they're exposed to commodity price fluctuations, and they're exposed to currency volatility, especially when it comes to the Ghana cedi. So risk management is key. However, we have a history when it comes to risk management in Ghana. And everybody talks about the Anglo-Gold experience of risk management, where when gold prices started going up, because they had entered into a hedge position, they were still selling gold at way below the world market price, the spot price then. But then that is the essence of risk management. Risk management is not about making profit. It's not about making profit from the market. Risk management is about stabilizing your business. It's about stabilizing your cash flows, having a certainty of what is going to come in and what is going to go out. And let me break it a bit down when it comes to Forex risk management. We call something forward contracts. Now, forward contracts, to present it in a much simpler way, it's an agreement between two parties, the one buying the Forex and the one selling it. Basically deciding that at a future date, I will sell this quantity of Forex to you.
Irrespective of market.
At this price, irrespective of where the market is. Now the question is, how do they determine? If you understand how they determine that, you will find it a lot easier to go into Forex risk management. And let me explain that. Now, a forward contract, to decide that I'm going to buy dollars at a future date, at a future price, simply means that I have cedis today.
Okay.
I could buy dollars today. Now, I'm committing to buy dollars in the future. So how the bank sees this is that the cedis you have, which you could have bought dollars today, will be invested. Now, that investment, let's say it's a treasury bill, is going to give you a specific return. That return is added on to the principal cedi you have. And I'm not saying you have in the sense of the cash, in the sense of the commitment. Okay. So that gives you a future value of that cedi amount. Then the value today corresponded to a certain value in dollars per the spot rates today. That dollar amount, also when invested in dollars, will have some return, and that gives you a certain future dollar amount.
Okay.
Now, that dollar amount in the future, that cedi amount in the future, when you correlate that, that gives you an exchange rate in the future. There is nothing artificial about it.
Okay.
There is nothing.
That's really insightful.
There is nothing artificial about it. There is nothing manufactured about it. It's simply the same interest rates on the cedi, interest rates on the dollar, brought together to give you that future exchange rate.
Okay, so
that you commit to.
Scientifically, yes, it's nothing magical, but on our market, it's very unpredictable. So that's where businesses have issues. There are times of the years that we just project, at this time every year, it just goes up a bit. At this time this year, it goes down this way. Those are the kind of things businesses can analyze.
Okay.
Yes, but beyond that. Yes.
So it is so because the practice is low. Big businesses out there, there are big commitments when it comes to foreign currency exposure. They would hedge as much as possible.
Okay.
If you're in a market when we are hedging very little, then you're allowing volatility
to affect
play.
the business
you're allowing
directly.
Speculation to play. And hedging is not speculation. Rather, not hedging is speculative.
Speculative.
Not hedging, rather, is speculative. And that is how we need to look at it. So we should encourage more of Forex risk management practices so that in itself, naturally, would actually reduce the volatilities that
rather than just sitting back
and then volatilities we experience. If you know that Forex supply is slightly more around October, November, when Cocoa Board has raised funding.
The cocoa syndicated.
The cocoa syndicate. And then we fall short around February, March, before government goes to market, for example. You will want to rather hedge for those periods, whether you are on the need side or
Yeah.
you are on the supply side, rather than leaving it open and then coming to market and doing a spot activity.
Great.
So I
Great.
think risk management will rather minimize the volatilities we see.
Okay.
And especially for players in this sector, they should go into risk management.
Emmanuel, you've given us so much on the opportunities and all the challenges and all the capital issues in the sector. So, if you have an opportunity to meet the Minister of Energy, what advice will you give him that would make the industry benefit?
So, if I'm given the chance, and it's a chance I am going to take and look out for that opportunity to advise the Minister for Energy, one, I would advise him to create a fuel supply aggregator.
Okay.
Why this? Fuel supply aggregation would mean that instead of competitiveness in bringing in fuel, let's aggregate the import of fuel so that we can optimize the efficiency of the supply of fuel.
Yeah.
You can't have a bus for strategic storage. You can't have a toll for refining crude oil. And then you also have BDCs bringing in refined fuel. You should find a way to aggregate
all of them,
the operations and drive efficiency. It will actually bring fuel. It could actually bring fuel prices down.
Okay.
And I'm not saying government create a separate entity to do this. You can actually use these very players to be the aggregators, to form the aggregator. And that is very key.
I think this has been tried before, where imports was from a particular source, and then it had its issues. That's how come it was opened up.
So government was the key player. So so you introduce private market. So I'm still saying let private market lead it, but create that aggregator framework. Because think about it. ABSA, Standard Chartered, EcoBank, GCB, Fidelity,
your big banks,
big banks, are all looking at these individual entities doing the same thing, bringing fuel. And the limits they've assigned to these entities are either not enough for one player or in excess for the other.
Sure.
There's so much inefficiency.
Sure.
And fuel supply aggregation would eliminate all this and would actually make the banks more comfortable now.
The risk is reduced.
Exactly, because there's increased visibility and there's so much control. That is one. The second thing I would say should be looking at our renewable energy penetration into our energy supply.
Okay.
We've talked about it for decades, and today our renewable energy supply into our energy mix is less than 1%.
Yeah.
Go to the Ministry of Energy and they will tell you our target was to achieve 10% by 2020. Not a time in the future, a time that is past. By 2020, we should have achieved 10%. 10% will mean in today's installed capacity, something in the region of 400 megawatts of renewable energy. The current energy mix of 80-20, that is respectively thermal and hydro, will never bring fuel price, energy costs down. Because when you take the thermal component, and if you look at the budget for 2021, government in 2020, as part of the loans buildup, paid over 10 billion Ghana cedis in response to capacity charges alone. And by capacity charge, we mean restricting or dedicating the producing asset to your benefit. So whether it produces or not, because it's been dedicated to your benefit, you pay for that investment. And then you pay for the energy charge when it actually produces the power. And capacity charge alone, government says they pay about 10 billion Ghana cedis. Okay, that should be a thing of the past. Energy costs can never come down if you continue to do this.
But if you now have to let some of these contracts, because you've signed a lot of these IPPs, if you have to let them go, won't they come with judgment debts and all that?
And already we've seen example. So a way to look at this, for example, is to see, are there amendment clauses? Can we are not cancelling your contract, but can we change the source of energy supply?
Okay.
What can we do? If you're a single cycle plant, for example, can we convert you to a combined cycle? Which brings down the energy cost component. Again, it requires some investment. And these investments, government, it's not only government that have to borrow. We usually say our markets are not deep, we don't have enough capital in this market. To us in Manuel Africa, that is wrong.
Really?
It is wrong because when we had a financing crisis, the banking crisis, how much money is lost out there? What was the bailout amount government needs to borrow money for?
Yeah.
Over 20 billion cedis. And we are not talking about financial crisis with top banks. We are talking about microfinance, savings and loans, fund management entities. At that level, that is the capital that was lost.
Yeah.
So there's capital in this country.
Yeah.
What we don't know is how to tap that capital.
So, Emmanuel, that's so much that you have given us. Thank you very much. And welcome. I hope you meet the minister, because I can see you have so much that you can talk to him about that we can all benefit. Thank you.
You're most welcome, and thank you for this opportunity too.
I'm sure you've learned so much. It's all about collaboration, measures, pooling of resources, and speaking to the experts. This is what we do on Energy Quest. We demystify the energy sector. Till we meet again. Ciao.